This is TradeFlow News, bringing you relevant news and insights from around the world. TradeFlow News, enabling trade for SMEs and economies worldwide.
These are some of the key topics that we will be looking into in today's program.
First, let's take a look at the overnight headlines which are impacting the commodity markets.
Oil exports from Russia's western ports may rise in October as domestic refineries will increase runs only marginally despite coming out of the peak maintenance season, trading sources said. Traders had been largely expecting oil loadings from the ports of Primorsk, Ust-Luga and Novorossiysk to fall in October versus September due to an anticipated rise in domestic refining. Two Russian industry sources said several plants will finish maintenance next month, but others will decrease throughput after running at capacity to compensate for refinery outages across Russia in previous months.
U.S. crude oil stockpiles dipped to their lowest level in a year last week, while fuel inventories rose, the Energy Information Administration, EIA, said on Wednesday. Crude inventories fell by 1.6 million barrels to 417.5 million barrels in the week ending September 13, the EIA said, compared with analysts' expectations in a Reuters poll for a 500,000-barrel draw. Stocks, excluding the Strategic Petroleum Reserve, hit their lowest level since September 2023. In the Midwest, crude inventories declined to their lowest since December 2014.
Moving on to the top news in the energy sector.
China's gasoline exports were down 44% in August from a year earlier while those of diesel fell 29.7%, customs data showed on Wednesday, due to lower refinery output and softening export margins. Gasoline exports were at 770,000 metric tons last month, the lowest since April. That was off steeply from 1.38 million tons in August 2023 and also down from 790,000 tons in July, data from the General Administration of Customs data showed. Diesel exports were at 880,000 tons last month, down sharply from 1.26 million tons a year earlier but up from July's 540,000 tons.
Oil prices rose on Thursday after a large interest rate cut from the U.S. Federal Reserve, but concerns over global demand lingered and capped gains. Brent crude futures for November were up 36 cents, or 0.5%, to $74.01 a barrel at 0618 GMT, while WTI crude futures for October were up 34 cents, or 0.3%, to $71.15 a barrel. The benchmarks recovered after falling in early Asian trade. The U.S. Central Bank cut interest rates by 0.5 percentage point on Wednesday. Interest rate cuts typically boost economic activity and energy demand, but the market also saw it as a sign of a weaker U.S. labor market that could slow the economy. Next, we have the top news in metal markets. The Chinese government on Wednesday pushed back on a U.S. probe of whether China is helping its neighbor Russia dodge a U.S. ban on Russian uranium imports, saying Beijing has always opposed illegal unilateral sanctions. Reuters reported exclusively on Tuesday that the U.S. Department of Energy and other relevant agencies are closely tracking the imports from China to ensure the proper implementation of the ban on Russian-enriched uranium that President Joe Biden signed in May. The U.S. is concerned that China is importing and using Russia's uranium in its own power plants, and then exporting domestically produced uranium to the United States, effectively undermining the U.S. ban that is intended to deprive Moscow of revenue for its invasion of Ukraine.
Prices of most base metals rose on Thursday, following the long-awaited U.S. Federal Reserve rate cuts and with bets of more stimulus in top metals consumer China. 3-month copper on the London Metal Exchange added 0.2% to $9,418 per metric ton by 0449 GMT, extending previous sessions' gains. The U.S. Central Bank kicked off its monetary easing cycle on Wednesday with a larger-than-usual 0.5 percentage point reduction that Chair Jerome Powell said was meant to show the policymakers' commitment to sustaining a low unemployment rate now that inflation has eased.
We will now look at the top news in the agricultural sector.
Indonesia's palm oil exports are expected to decline in 2024 due to increased domestic consumption because of a higher biodiesel blending mandate and a slight decrease in production, an industry official told Reuters on Thursday. Lower output in the world's biggest producer of the tropical oil would limit exports and support benchmark Malaysian prices. The country's exports could fall by 2 million metric tons from a year ago to 30.2 million tons in 2024, Fadhil Hassan, head of the Trade and Promotion Division at the Indonesian Palm Oil Association, said on the sidelines of the Global Oil Conference.
That is all for today's news on commodity markets. Stay tuned to TradeFlow News as we continue to provide you with more updates. We also invite you to follow us on Twitter at TradeFlow News, which allows you to watch our program on your mobile device or desktop to receive information from there.